Good evening everyone. In this video, we are going to cover some more indicators. As if you saw my previous video, I covered some indicators from Tradingview. In this video, I am going to cover one more indicator which is called nothing but average true range. So without wasting any time, let's get started. I hope my screen is visible to you all. So let's start. So here my ATR indicator is on. So I am removing this indicator. Bro, please be removed. Yes. Right this. Right. Yes. So in this video, we are going to cover nothing but what we call it as oh yes. Let's keep it here. Okay. So here we are going to cover an indicator which we call it as average true range, which is open here, which we can also call as ATR or average true range. This is our ATR indicator. I don't know what happened to this. I really don't know what happened to this text sign. I really want to write here. Yes, now it's working good. I think they sometimes just want to don't work as I say. Yes. So today we are going to cover average true range, or we can call it as ATR indicator. So without wasting any time, let's get started. Yes. So before before starting, let's think that what is average true range and what actually this indicator indicates. As the name suggests, average true range, which means without going in further detail, let's think basic. This indicator is based on something called average, something of averaging. Okay, this is very much clear to you. Now, what this indicator indicates is nothing, but you have to remember it. If anytime if you are going to use average true range, you have to remember this one word. That word is nothing but volatility. Yes. If anytime you have seen average true range, you have to remember that this is a volatility indicator which is used in technical analysis to measure to measure how much an asset, like for example asset is like stock and indices. Here I am working in nifty, that how much an asset, like how much, see for here you can say that that you have to analyze that how much this nifty 50 typically moves on an average over a given period of time. Yes. So what we remember from the first word, we remember two things. The name of the indicator is average true range. So the first word we remember is average. And the second thing that I told you to remember is nothing but volatility. So what do you mean by volatility? In my earlier videos, many times I told the meaning, the real meaning of volatility. But here I'm not going to tell you volatility now. First, think about average true range. So, average true range is a volatility indicator to measure an asset which typically moves on average over a given period of time. Which means we have to see that how much the how much on an average, that how much on an average a single indices moves on a given period of time. If we measure this with some process, I'm not going to tell you what is the process at this point in the as we move forward. I'm going to tell you. So think like this, that with some process we find out that how much this market is moving, and this indicator is basically nothing but a volatility indicator. A volatility indicator is in which we are measuring that how much this asset, or maybe if I'm using in some stock, that how much this stock is moving. This is the work of this indicator, which we call it as average true range. So now we know that what is the work of average true range and what it does. So now we have to know that what exactly it measures. Yes, we now we had an idea that okay, it is a typically volatility kind of indicator. It uses some average concept to measure. But what exactly it measures? So ATR does not show the price direction, that in which direction the price is moving. ATR doesn't show that. It actually shows that how volatile a market is. Now here again the question comes, that what is volatility? Suppose I'll give you an example to explain that what is volatility. If I'm trading in a very, very, very much volatile market, which means the prices are changing or moving with a with a very much with the, what would I say, with a very fast speed, but either it is going up or down. No, it doesn't matter. The speed of change is very much. I'm not saying that it is going up with a high speed or it is coming down with a high speed. No, the speed of change of price is very much. Suppose I'm having a premium of some, suppose how much at the money is it, 24895. Okay, so suppose I have at the money of 24900, and my premium is going on 100 rupees. If the volatility is very much high, then that particular 100 rupees will go 101, 102, 103, 104 very fast, or maybe it will come 101, 99, 102, 94, 105, 96. Anywhere it may go up, it may go down, it may decay, it may remain side, but the speed of change of the premium will be very much fast. This process, this kind of phenomena in the market, we consider it as volatility, where the change happens very fast and the market is not stable. The premium moves very fast, the prices moves very fast. So this ATR indicator, what it measures, basically, with by using some process, it actually measures the volatility. The ATR indicator measures the volatility. So what you have to remember, again I'm saying, from the beginning of this lecture I told you to remember two words: volatility, and second is average. So what it measures, what ATR measures, is nothing but volatility. Now we have to think that when will be the volatility will be high and when will be the volatility low. So suppose we are using ATR, and the ATR will be two types. Maybe the ATR will be high, and secondly, the ATR will be low. So when the market will be volatile and more volatile, and when the market will be less volatile, let's think about it. So if the ATR will be high, which means the market will be very much high volatile, which means the prices will move very fast. And if the ATR is low, which means the market is low volatile, the prices are stable, the market are stable, and you can trade in your market according to. And I don't know what strategy do you use. If you are using strategy of stable market, then you have to see the ATR if it is low. If you use the strategy of very much high volatile market like long straddle and all, then you have to see if the ATR is high. So I told you all this, but let me write it once, because just telling is good, but once you write something, no, then it's very beneficial, because if I write it, I'll remember. If you see that I'm writing something, that it will take a minimum amount of time, but you will also remember this. So I'll write here high ATR equals high volatile. Low ATR equals low volatile. Hmm, it's actually looking good. Yeah, it's okay. So if the ATR is very much high, the market is volatile, and if the ATR is low, the market is low volatile. Now, we know the technical aspects that what a ATR does, but what we always focus when we used to study about indicators, one thing. When we used to study indicators, we always remember one thing is nothing but mathematics. Yes, every indicator contains its own mathematics. So now we are going to see that what are the formula of this average true range. Yes, nothing is just a formula. If you don't remember, then also it's fine. Who's going to ask you? But okay, I'll write the full true range formula. It is nothing but the maximum of high minus low, comma, high minus previous close, comma, low minus previous close, bracket close, and both of these things will be in mod. Where is the mod? I'm not getting it. Hmm. Hey, why some things are like this sometimes? Okay, fine. Yeah, it's fine, and it's fine. Okay, all the formulas are fine. Yes. Where is the mod? Sometimes I'm very good. Sometimes I got really confused of this keypad. I think I have to change it. Mhm. I don't know why this thing. Okay, it's fine. So this is the formula of true range where we have to we have to take the maximum of high minus low, high minus previous close, and low minus previous close. All these three ranges, the maximum amount, what is it? We have to see in all these three, which is the maximum that would be taken as the average true range. Suppose here the maximum is high minus low. So we'll take this. Suppose here the maximum is high minus previous candle close. Then we will take this. Suppose here we see that low minus previous close. Here the highest is this. So among all these three, the maximum will take the maximum. See here, here, and here, anywhere. So this is nothing, but this is the basic formula of average true range. There's one thing missing here. Yes, yes, yes. I got it. I got it. Here I want to add one more thing. That's nothing but this. Yes, this is a very much important thing. That's what I'm thinking of this. Yes. Yes. See, high minus previous close. So if the previous close is higher than the high, then this term will be negative. So I put a mod on this so that this term will be always positive. Similarly, low minus previous close. This is possible that previous close must be greater than the low. So to avoid the negative range, I just put a mod here and here to see that all these terms are positive. So high minus low is obviously positive. This term is inside a mod, so this will be also positive, and this term is also inside a mod, so this will also be positive. So here we have three positive terms. The term which would be maximum, that will be taken as here in the line of average true range. If this will be maximum, it will be taken. If this will be maximum, it will be taken. And if this will be maximum, it will be taken. Similarly, by taking this line is drawn, and this line is which we call it as average true range. This is the simple, sweet, and mathematical explanation of average true range. I hope you guys like this video. Please see the mathematics, test it if this works on live market or not. I'm not going to comment on this if this works or not. You have to do the back testing and see if this ATR indicator works or not. And if you do test it and you have any conclusion, you can tell me in the comment section. And happy and loss free trading. Thank you.